Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, July 25, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? A lot of stuff happened during the day. We had an unbelievable trading day in a very positive way in the live trading room. We'll get to that a little later. We have an ongoing bonanza for the lazy swing trader automagical Algo system. We'll get to that later. And the S&P is still headed down into what I believe is a cycle low coming. Now, it doesn't have to be a cycle low for new highs. It may be a lower high. I believe we discussed some of this last night. It doesn't matter for now. We're looking for a low. Didn't necessarily think it was going to come today, maybe not even this week. I really was zeroing in on next week. Today certainly gave the impression early on they were making a low, but not by the end of the day. They finished near the lows. They came in to run a test in the neighborhood of the trend line today. The trend line is important. It was important before. You could see over here where they came up to it here. That was important. And then also another important spot was just a few days later where they spent some time eating off the clock right around the trend line, broke out above it, and have now come back to run a test of said trend line. That is normal garden variety market behavior. The numbers that we talked about last night on the downside, 533.07 down to 527.40, still stand. They're still valid. Remember, we're not saying the market has to get to that area. I'm more interested in time rather than price. Time and price are important. Time is more important than price. But if in fact, let's say next week, one of those prices, or even tomorrow for that matter, one of those prices converge with the time of a cycle low kind of territory, if you will. We're in the orb of that cycle low or expected cycle low, at least from where I sit. Again, not a long-term cycle. I think things will get volatile around and before the election. I think there's legs up, there are legs down, and I think we will have a trader's tape on our hands. From here, the gauge is this. Below the trend line opens the door for the lower stuff. Staying above the trend line keeps her in bullish mode above the trend line. Will she come down to visit the 20-period moving average or home base on the weekly chart? It's been a few months since she paid a visit to home base. Home base may be feeling a little lonely. Happens to come right in that neighborhood of those numbers, the weekly chart home base situation. Early next week, we will be coming into an on-time type of situation. Interesting piece of information. And remember, we really have two breakout areas coming up. One was basically reached today, although from an intraday perspective, they did come up pennies short of the trend line. But from a visual daily chart perspective, they came in to run a test of the trend line. That is also a breakout area in addition to the 533.07 that we discussed last night. That comes from this candle here. That was the high before the market pulled back. Breaking out above it creates, by definition, a breakout area, at least from where I sit in my book. And therefore, we know that markets like to come back to run tests of former breakout and breakdown areas. Write that down, put it on a sticky note if you don't already have it on one. When you look at the intraday chart, and this is a half-day chart, it's a 4-hour chart, you can see here where they tried to put in a bottom in the first half of the day, and instead of just a garden variety retracement, they did a almost full-on retracement, almost making a new low or running a test of the low. 2-hour chart, you could see here, made a bottom, had a really nice rally into the early part of the afternoon, late morning, early afternoon, giving it all up in the afternoon. Not going to see anything materially different on the hourly chart other than the fact that just reinforces the nice run off the lows that we had. And frankly, folks in the live room participated in the large and very large majority of the move from around the lows this morning. And yes, I was pounding the table to hold the trailing positions on the trade after we took a base hit. I said, I've seen this before. This one can give you another 20, 30 handles. They gave us a total of roughly 50 handles or more on the trade, depending on where traders exited. That's 5 SPY points, 50 S&P handles. Yeah, that's what I'm saying. We call them Whoppers with cheese. It's all in here. It was in the notes this morning. We're going to point out and highlight a few important things. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. Because if you're trading in the S&P or any vehicle that tracks the S&P, options, futures, doesn't make any difference. This is information that you'll want to know. It can be helpful / beneficial / profitable to you. Early dark 30 notes was a broad stroke. Let's scroll up a little bit and see when we start to narrow things down a little bit at 8:30 after the phony economic data release. And what I'm saying here is there are numbers within no man's land, and no man's land is the place below this prior low over here that we pointed out last night, and a gap that was most likely going to be filled. Stay with me on this. 539.15 give or take, and 538.25 give or take. Those are two numbers that I came up with. Should be important, should be supportive. Then you have the trend line around 537.25. You had a gap down at 536.91. So all this stuff down there is important. The rescue on the flip side begins above 541.65. This becomes our pivot. You'll see that depicted later. 5-minute chart, right of the vertical, is today's activity. Just want to point something out before we really get going here. 538.25 was one of those numbers we just looked at, and that is where they closed the tape today, give or take a couple of pennies. Interesting information. This was my buy zone this morning. They spiked it by a little bit and absolutely ripped it back up in the other direction. We had a laundry list of traders that just made buku profits today in the live room, inside the numbers. It was fantastic. And then 541.65 was the pivot, and you could see that here in the notes right before the open. 541.65 is our pivot. And you could see here 9.15, 539.15 down to 38.25 is support and a bounce back in the other direction zone. All laid out before the market was open for business. What I said to traders in the live room was, hey, look, if they start getting above the pivot, 541.65, start closing candles up there, there's going to be a squeeze and they're going to get sucked up. And that's exactly what happened. Dollars to donuts. Pause the video, read the notes, go back to the chart to double check the work. It's all in here, everything you need from an intraday perspective in the S&P. Now check this out. What about resistance? What about targets? Where are they going? 543.35 to 543, should have been 44.25. And there was your exit between 543.35 to 544.25. Told traders you can hold a trailer. Still yet. It could have been what I called an all-day sucker. It wasn't, meaning it could go up all day long. It wasn't. They came back down, but they certainly went up another leg from there. Where did we have the next resistance point? Well, but wait, there's more. Everything you need is in here each and every day. Traders always ask me, what's the bull bear prize today when we're getting off after the morning session? Well, the bull prize was 546 or above. Say above 544.25, the door opens for a leg higher toward 546. 546. Not 545, not 545.5, but it was 546. Remember, pause the video, read the notes, go back to the chart to double check the work. What about stocks on the move? What do we have going on over there today? We had Teradyne, we had Honeywell, SLV didn't get to its number, silver. WM, Waste Management, we'll take a look at that one. EW, that was a whopper. And Dow and Love didn't hit their entry objectives, so they're off the board. They're no trades. Let's look at the charts of the ones that did. There's your zone in Teradyne. They came into the zone. They bounced around, back to the top of it, and above the top of it. The numbers work. Just a base hit. We're looking for base hits. When we get doubles, triples, Whopper Juniors, and so on, those are the ones that pay handsomely. Base hits put you in the Hall of Fame. It's a matter of consistency. You never know which ones are going to give you the rocket ride. Honeywell, $200.50. They came into it, spiked it, took off back a couple of bucks in the other direction. Same routine, another base hit. Never know which ones are going to give you 5, 6, 8, 10 bucks. There's what Waste Management looks like until you take the first line off the board. Why? Because the stock opened up at 202.88 below the first number. First number's off the board. They opened up at, what was it again? 202.88. What was my number? 202.88. We'll give that one a funny how that works. Then they came back for a retest. The numbers work. There are no accidents nor coincidences. Need I say more about this one? The lazy swing trader automagical algo system was short Edward Life Science, was short from an average cost of $92.07. First profit was taken at just under $87. That was our base hit, holding a trailer, gap down, $60 today, $59. It was just unbelievable. Things down 31% today. Lazy swing trader automagical algo system. There's a weekly chart. It was shorting around the approaching of a double top situation, but that's not the reason. It had waning velocity. How about this one? This is another lazy swing trader automagical algo alert. General Mills, Geis. This is the defensive stuff, the stuff you find in your household, the stuff where money managers go to hide. Buy alert issued down at 63.41. First profit target reached today, 67.20. What was high of day? High of day was exactly 67.25. Traders knew the profit target before it got there. It's posted when the trade is activated. Base hits put you in the Hall of Fame. This is now a risk-free, emotionless trade. Automagical algo system. There's another exit today, if that wasn't enough, in Gilead Science. Buy alert, 64.29. Final exit today was 76.60. 76.80, pardon me. Nice trade. Automagical algo system. This was the third profit in Gilead. Newly minted short trade alert came out of the lazy swing trader today. It's a little early to give it to you. 1947 was the short price in AT&T. Already at least a little bit, 1.5% in the money. At least it's headed in the right direction. Nice tail on the daily chart, by the by. Lazy swing trader automagical algo system. What's going on over in Camp IWM? They had an up day, up 1.25%. Even though the spiders fell all the way back down, they had a crap out in the afternoon. This is an hourly chart. The IWM just had a pullback after the rally off yesterday's low. They didn't make a new low today, and they had a pullback in the afternoon versus making a new low or at least testing the morning low. So it's interesting information. There's relative strength in my favorite market leading indicator. Of note, puzzle piece on the table. Now check out the folks down at the transportation department, Buttigieg's crew. Look where that high of day is, right at that trend line. Do you think the market knows about that trend line? Think that's a coincidence? Just a happenstance, an accident? I think not. Inside this range, she could do anything. Above the moving averages, she's bullish. So she's staying above the moving averages, at least as of close today. Tomorrow's close is more important. Does she close inside or above the trend line, below the moving averages, or stays above the moving averages? Tomorrow I will be looking at weekly closes. Did something change by the end of the week? If they close right here tomorrow, nothing will have changed from last week, but you want to know the information. Weekly close is much more important than a daily close by about a factor of 5. Monthly close is more important than a weekly close by about a factor of 4. And so on. Same conversation I have with traders in real time in the live room who want to look at a 1-minute chart. I try and urge them not to look at a 1-minute chart because every time frame beyond a 1-minute chart is dominant than the 1 minute. It's more dominant than the 1-minute chart. It's more important than a 1-minute chart, a 5, a 10, a 15, a 20, 30, and so on. So a 1-minute chart gives you a false sense of what's happening in the market. It's too fast. And frankly, I don't know any trader. I've been doing this a long time. I don't know anybody that's successful using a 1-minute chart to trade off of. Just saying. Case in point, a 5-minute chart is dominant to a 1-minute chart by about a factor of 5. Same thing. All charts act and react the same way. Second favorite market leading indicator in the transports, and they were up about 125 today, meaning a 0.25%. Almost 200 points in the transports. So my two favorite market leading indicators were up. The S&P 500 or SPY was down $2.80. SPX was down 28 points. NASDAQ had another woodshed day. More divergence. They will resolve themselves. Transports and IWM either have another leg down or they're telling us that the market's going to be lifted up sooner than later, meaning the S&P and the NASDAQ. That's my read. Speak of the devil in the Qs, here's a weekly chart. They hit the 20-week moving average today. That's an important place. This is a zone we talked about last night. They're in the zone. Early next week, they'll be in an on-time type of situation. Write that down. Put it on the same sticky note as the on-time type of situation for next week in the SPY. Same sticky note. Conservation mode. You must save the earth. Don't waste sticky notes. XLF financials tried to rally today, crapped out like the spiders did. Above 42.50, she's okay. Below 42.50, opens the door for a leg lower. Above all the moving averages, trend is your friend. You take a look at the weekly chart. Well above all the moving averages, trend is your friend. I have a tail candle from last week, so that's of note. This week, all she did was about halfway home retracement of the tail candle. Looks very similar to what we did as a group trade in the IWM last week when she reversed or retraced her tail candle and then subsequently had a decline that we were participants of. Smash mouth, woodshed day, below the last breakout area, below the 20-period moving average on the weekly chart. We'll see where they close the week. Might want to jot this number down on a sticky note, 223.75, another leg down. That will become or is a target. It's also a place where we're likely to find a bull-bear battle at minimum of an intraday perspective. It's a big spot. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.